Hello, I'm Carl Stanton, Executive Chairman of DevvStream. Here with me today are DevvStream's Chief Executive Officer, Sunny Trin, and Chris Merkel, its Chief Operating Officer. Before we move to our agenda for today's annual general meeting, I'd like to give an update on our business. After that's complete, we'll move on to the shareholder voting results. We're excited to be here with you today to discuss the most significant milestone in our company's history. As we recently announced, DevvStream has entered into a definitive agreement for a business combination with Southern Energy Renewables. This transaction represents a structural transformation. With its finalization, we are evolving from an environmental asset management firm into a diversified industrial clean fuels platform by combining DevvStream's financial and carbon market expertise with Southern's large-scale infrastructure capabilities. Our goal is clear: to build a U.S.-based, vertically integrated company capable of producing sustainable aviation fuel, or SAF, and green methanol at scale, while monetizing the environmental attributes to drive down costs. We believe this is happening at a moment when demand is accelerating, global mandates are tightening, and capital is finally moving into the sector. I'll now pass it on to Sunny Trin, CEO.
Thank you, Carl. Before we proceed, I'd like to draw your attention to our safe harbor statement. Today's presentation contains forward-looking statements within the meaning of the Securities Act of 1933 and Exchange Act. These include statements regarding the timing and structure of the proposed merger, expected benefits, and our future capital requirements. These statements are based on current plans and estimates, which are subject to risks and uncertainties. Actual results may differ materially due to factors such as regulatory approvals, market acceptance, and our ability to secure necessary financing. We undertake no obligation to update these statements except as required by law. Please refer to our SEC filings, specifically our Form 10-K and the upcoming Form S-4, for a complete discussion of these risks. This discussion is being provided in the context of our annual general meeting and does not replace or modify the disclosures that will be made in the Form S-4. "2025 was about readiness. We operated asset light, advanced our environmental asset capabilities, strengthened public company controls, and positioned DevvStream for a much bigger strategy. Over the past year, DevvStream completed its Nasdaq listing, reduced its cost structure following the de-SPAC, and shifted decisively from transaction-driven activity to execution. DevvStream was initially created to focus on the voluntary carbon credit market. However, we must address the macro reality. Despite the long-term promise forecast by McKinsey and other experts, the market had declined from 2022 through 2024. We began to see early signs of stabilization and selective recovery in certain segments of the markets during 2025. In response, we evolved. We focused on high-quality credits with known demand. This includes CORSIA credits, where airlines with international flights are being mandated to reduce or offset their emissions with these types of credits. In addition, we have broadened our scope by adding IREX to our portfolio. IREX have continued to show strong growth trends supported by expanding corporate demand. According to iTrack, the first 7 months of 2025 saw a 12% increase over the same period in 2024. This positioning leverages environmental assets that are seeing a growth in demand, offering the potential to provide immediate revenue to clients while materially reducing overall project costs. We entered into a non-binding memorandum of understanding with FIAFI to explore potential project-level financing opportunities. Discussions are ongoing, however, and there can be no assurance that a definitive agreement will be completed. Simultaneously, we executed an enhanced crypto treasury strategy. This strategy is intended to support balance sheet flexibility and digital infrastructure initiatives, including potential future applications in tokenization of real-world assets, or RWA. RWA tokenization has been growing dramatically in the financial world. We believe it will be a welcome addition to the environmental asset realm, bringing needed liquidity and transparency, and we intend to utilize our digital infrastructure to lead that convergence. At the same time, this has the potential to bring us significant recurring revenue. I'll now hand it over to Chris Merkel, our Chief Operating Officer.
Thanks, Sonny. I'll spend a moment on our financial position using figures taken directly from our publicly filed Form 10-Q. As of October 31, 2025, DevvStream reported approximately $8.8 million in total assets. This includes approximately $2.1 million in cash and restricted cash, with the restricted portion associated with disclosed financing arrangements. We also held approximately $4.7 million in restricted digital assets, which are custodied with a qualified third-party custodian and reflected on our balance sheet at fair value. The remainder of our assets consist of working capital items, including receivables, prepaid expenses, carbon credit-related assets, deferred financing costs, and investment holdings, all as reflected in our Form 10-Q. From a capital standpoint, the company has established capital access arrangements that are already disclosed in our public filings. We are not characterizing these as new or incremental funding, but rather as part of the company's existing capital structure. From a financial perspective, the focus over the past year has been that we have focused on cost discipline, strengthening public company controls, and maintaining balance sheet flexibility while positioning the company for the strategic evolution Carl and Sonny have described.
Thanks, Chris. Well, this next slide is the core message of today's presentation. DevvStream brings environmental asset origination, digital infrastructure, and a flexible capital structure. Southern brings industrial-scale clean fuels development, including a biomass to fuel pathway targeting carbon-negative SAF, access to domestic feedstock, and a potential Louisiana-anchored flagship project. So why combine these? Because we believe that the biggest barrier to SAF adoption today is not awareness, it's economics. Alternative fuels remain more expensive than fossil fuels. IATA estimates that the SAF can cost between 2 and 5 times fossil fuels for aviation purposes, and that cost burden slows down adoption. Our combined platform is designed to reduce that barrier by pairing the fuels pathway with environmental asset capabilities that can lower the effective cost for customers. Now, I'd like to separate two things clearly. First, the policy and demand backdrop is real. It's not a DevvStream claim. It is a third-party regulation. Aviation and maritime sectors are facing tightening mandates, and customers are being pushed to adopt low-carbon fuels. Second, our claim is that this platform is designed to create a more financeable, scalable approach anchored in Louisiana, where environmental assets and fuels will work together rather than separately. For investors, we believe this reframes DevvStream from a microcap services profile to a financeable industrial fuels and credits platform with a long-duration revenue potential. Let's get specific on disclosed transaction terms. Upon closing, Southern equity holders are expected to own approximately 70% of the combined company, and DevvStream shareholders approximately 30%. A critical signal of confidence here is capital commitment. On December 3rd, 2025, Southern shareholders completed a $2 million PIPE investment into DevvStream at a significant premium to the then market price. And Southern committed to invest significant pre-closing capital to launch front-end engineering for its first commercial plant. Southern also secured a $402 million bond allocation from the Louisiana Community Development Authority to support its flagship biomass to fuel facility. While this is subject to final approvals and conditions, it provides a significant potential component for the project's capital structure. Closing of this business combination is currently expected to occur in the first half of 2026, subject to customary closing conditions, including shareholder approvals, regulatory approval, and the effectiveness of a Form S-4 registration statement. Now, from an investor perspective, here's why this matters. This is not a cosmetic transaction. It's a structural move to create an integrated, clean fuels platform that can be financed and scaled, serving the massive global aviation and maritime shipping markets. And it's designed to give DevvStream shareholders meaningful participation in a larger, more diversified platform.
The anchor of this transaction is the proposed Louisiana project. Southern is currently developing a flagship biomass-to-fuel facility in Louisiana. This location was not chosen at random. We believe it offers a high concentration of biomass feedstock, existing strong logistics infrastructure, and an experienced industrial workforce. Most importantly, as Carl mentioned, the project has received a $402 million bond allocation from the Louisiana Community Development Authority. While this is subject to approvals and conditions, it provides a strong indication of the project's future capital stack. This facility is designed to convert wood waste biomass into green methanol and carbon-negative SAF. Southern is currently in advanced discussions with technology partners to de-risk this development. This is a commercial scale opportunity intended to generate industrial, multi-year revenue streams.
Thanks, Sonny. So here's why we are diversifying into renewable fuels now. Southern is targeting two specific sectors, aviation and maritime. Both are considered structurally hard to abate industries. In other words, due to the physics of how these industries operate, long distances and heavy payloads, electrification is not a viable option in the near term. Liquid fuels are necessary. Yet, each of these sectors accounts for an estimated 2 to 3% each of total global greenhouse gas emissions, creating immense pressure to decarbonize. Look at the scale. Aviation is massive. In 2025, roughly 5.1 billion individual passengers flowed through airports. To meet net zero goals by 2050, the industry needs to replace over 100 billion gallons of fossil jet fuel with 125 billion gallons of SAF. Similarly, maritime is the backbone of the global economy, moving 12.5 billion tons of cargo, or 90% of global trade. It currently burns through 300 million tons of heavy fuel oil annually per DNV. Both sectors are forecasting continued growth for the foreseeable future. And one potential strategic advantage, Southern's planned Louisiana plant is to design to produce fuels for both markets. Southern's technology can produce green methanol to sell immediately to shippers, or it can further process it into SAF for airlines. This capability has the potential to provide Southern with a critical diversification in its end markets and to allow the company to pivot production based on demand and pricing dynamics. Now, I'd like to focus specifically on SAF since it's been so topical lately. As you can see on the slide on the left, air transportation is notoriously hard to decarbonize. And here's the economic reality. SAF trades at a substantial premium to fossil jet fuel today. As I mentioned from the IATA study, 2 to 5 times fossil jet fuels. That premium reflects high feedstock costs and very limited supply. But since fuel represents over 25% of a typical airline's cost structure, there's very little room for extra cost. This is a dilemma that threatens to slow adoption. Most current SAF is made from fats, oils, and greases, otherwise known as HEFA. While effective, this feedstock competes with food ingredients and risks creating inflationary pressure for consumers. Southern, on the other hand, is pursuing a different path, wood waste biomass. It is abundant, especially in our Louisiana geography. It doesn't compete with food, and it is cost advantaged. When this low-cost feedstock is combined with carbon sequestration and Southern's technology, which has the potential to generate substantial tax credits, the company unlocks significant value. But together, we can go further still by adding environmental assets to the mix. And this is where the inherent integration really matters. This combination intends to create a platform where environmental asset origination and monetization can support the customer economics. And this platform may serve as an additional lever to enhance cost efficiency, creating a pathway that may be difficult for many existing competitors to match. The strategic goal is clear: to pursue a structure designed to be cost competitive over time as incentives and mandates evolve. Again, not as a guarantee, but as a designed advantage. And I note that the universal adoption of SAF is key for the industry trade group IATA. On the chart to the right, you can see a recent projection. Even in low adoption scenarios, the expected long-term growth is extreme. Now, one important point on that demand, this is increasingly being driven by regulation, not discretion. We're tracking SAF policy developments across roughly 38 countries. As a reference point, both the UK and the EU put formal blending mandates in place at the start of 2025, beginning at 2% each. Those requirements step up materially over time, toward 22% in the UK by 2040, and as high as 70% in the EU by 2050. We're seeing similar conversations underway in a number of other jurisdictions. This is very different from the US framework today, which is still largely voluntary and incentive-based. In many international markets, SAF adoption is moving into a compliance regime rather than relying on corporate choice. So the reason this slide is here is simple. Global policy is tightening. That creates a structural demand tailwind for lower carbon aviation fuels broadly. But it is not a guarantee of revenue, and it's not a statement about one pathway or project. We believe platforms that can scale supply and manage the net effective cost to the end user will be better positioned to win. So where does the rubber meet the road? In Louisiana. Southern is a US-based developer anchored by a proposed flagship biomass to fuel project in Louisiana. Why Louisiana? Well, 4 reasons. First, feedstock. It offers concentrated wood waste biomass supply in abundance. Second, logistics. Louisiana has strong existing road, pipeline, and waterway infrastructure. Third, its workforce. It has an experienced industrial labor pool ready to work. And finally, fourth, leadership, state leadership. Strong pro-business state leadership focused on job creation and development. This project has experienced significant support at the state level so far. Specifically, that $402 million LCDA bond allocation mentioned earlier. Southern has the location, the feedstock strategy, and the identified capital pathway. We look forward to speaking more precisely about this as this process advances. So this is the vision. This combination is intended to result in a carbon-negative fuels development platform with embedded environmental asset value. Our strategy is to lower the effective cost of SAF globally through a differentiated US-based platform that can help speed alternative fuel adoption. With 2 engines, clean fuels and environmental assets. One direction, long-term scalable growth aligned with global mandates. Thank you for your attention. And now I will turn it to the moderator to introduce the formal portion of the meeting, the annual meeting of shareholders for DevvStream Corporation.
Hello, everyone, and welcome to the annual meeting of shareholders for DevvStream Corp. Before we get started, I would like to go over a few items so you know how to participate in today's meeting. 1, you have joined from the annual meeting using your computer speaker system by default. 2, is that today's meeting is recorded. Now I'd like to introduce Carl Stanton, Chairman of the Board of Directors of DevvStream Corp.
Thank you. Now that we've provided an update on our business, I would like to call the meeting to order. I'll note that Sunny Trin, our CEO, and Chris Merkel, our COO, are in attendance, as well as members of our board of directors. Thank you for attending. Nagar Adam, Corporate Secretary, is in attendance as well, as are members of our legal team at Shoemaker, Loop & Kendrick, LLP, our outside corporate counsel. So the meeting will officially now come to order. We will proceed with the formal business of the meeting as set forth in the notice of the annual meeting and proxy statement. After the formal part of our meeting, we'll give you an opportunity to submit any questions you may have. At this time, I would like to appoint Nagar Adam to act as Inspector of Elections at this meeting. Ms. Adam has taken and subscribed the customary oath of office to execute her duties with strict impartiality. We will file this oath with the records of the meeting. Her function is to decide upon the qualifications of voters, accept their votes, and when balloting on all matters is completed, to tally the final votes. Will the Inspector of Elections please report at this time with respect to the mailing of the notice of the meeting and the shareholders list?
I have at this meeting a complete list of the shareholders of record of our common shares on November 10th, 2025, the record date for this meeting. I also have an affidavit certifying that on November 19th, 2025, a notice of annual meeting of shareholders was deposited in the U.S. mail to all shareholders of record at the close of business on November 10th, 2025.
Will the Inspector of Elections please report at this time with respect to the existence of a quorum?
Proxies have been received for 2,130,607 of the 3,841,642 common shares outstanding on the record date, which represents approximately 55.46% of the total number of outstanding shares. This constitutes a quorum for the meeting today, and we may now carry out the official business of the meeting. If you have not already voted your shares, you may vote online prior to the closing of the polls. The polls will be closed for voting after we go through the matters to be voted on.
Okay, we will now proceed with the formal business of the meeting. There are 4 proposals to be considered by the shareholders at this meeting.
The time is now 1:24 on Friday, December 29th, 2025, and the polls are now open for voting on all matters to be presented. The polls will be closed for voting after we go through the matters to be voted on. The proposals to be considered today are Proposal 1, approval regarding the election of directors. As set forth in the proxy statement, nominees for re-election to the board of directors are Carl Stanton, Ray Thorne, Stephen Kakucha, Michael Max Bueller, and Jamila Parachi. If elected, these nominees will serve until the company's next annual meeting or until their respective successors shall be duly elected and qualified, or until their earlier resignation or removal from office. Proposal 2, approval of the frequency of the non-binding advisory vote on executive compensation. In conjunction with the Dodd-Frank Wall Street Reform and Consumer Protection Act, our shareholders are requested to indicate how frequently we should seek an advisory vote on the compensation of our named executive officers. Under the SEC's rules, shareholders may indicate whether they would prefer their advisory vote once every 1, 2, or 3 years. Proposal 3, approval of the proposal to conduct a non-binding advisory vote on executive compensation. In conjunction with the Dodd-Frank Act, we're providing our shareholders with the opportunity to cast an advisory vote on the compensation of our named executive officers as disclosed in the proxy statement. This proposal, commonly known as a say-on-pay, gives our shareholders the opportunity to express their views on our named executive officer compensation. This vote is not intended to address any specific item of compensation, but rather overall compensation of our named executive officers and the philosophy, policies, and practices described in the proxy statement. This say-on-pay vote is advisory and therefore not binding on the company. Proposal 4, the ratification of the selection of Davidson & Company LLP as the company's independent auditors for the year ending July 31st, 2025. You may vote your shares online at this time by following the instructions that you received in your confirmation of registration email. However, you do not need to vote online at this time if you have already sent in your signed proxy or voted online or via telephone prior to the meeting. Each common share is entitled to 1 vote. Are there any questions on the proposals? The time is now 1:27 and the polls are now closed for voting.
Thank you. May we have the results of the voting?
I have tabulated the preliminary results and confirmed that we have received the necessary votes to pass the following proposals presented at this meeting. 1, each of the 5 nominees for election as directors have been elected to serve until our next annual meeting of shareholders. The preferred frequency of future shareholder advisory votes on the compensation of the company's named executive officers have been indicated to be 3 years. The compensation of the company's named executive officers have been approved on an advisory basis. The appointment of Davidson & Company as the independent registered public accounting firm for the company has been ratified. We expect to report our preliminary voting results, or if available to us on a timely basis, our final voting results on a current report on Form 8-K to be filed with the SEC within 4 business days after the end of this meeting.
Thank you. Well, this concludes the formal portion of today's meeting. As a reminder, you can submit questions through the questions chat panel in the control panel. Questions submitted by our shareholders will be responded to via our investor relations link in the company's website. I'd like to thank you again for your attendance today at today's meeting and for your continued support of DevvStream. Have a good day.
This concludes the annual meeting. Thank you to all shareholders for attending the meeting. Enjoy the rest of your day.